Hello everyone. Today is February 26th, Friday. Happy Friday. Just want to quickly go over yesterday and then share with my view or insight or fact about the market. Dow for 561 points, test stop plumb as spiking bond yields rattled investor nerves yesterday. Treasury yield call for lower stock market valuations. S&P ending at down 2.45%, ending 3829.25. Dow Jones Industrial Average down 1.76%, ending 31,400.50. Next, GameStop, AMC, BlackBerry, and Nokia climbed higher on Thursday as Reddit traders returned to their favorite trade stock. Best Buy stock slumped over 10% on Thursday, hurt by fourth quarter revenue that fell short of Wall Street target. Shares of Tesla slipped as much as 4% yesterday as the report said the EV maker will idle the Model 3 line as its formal. Bitcoin hovered around $49,000. Oil rose to $63.34 per barrel, and US dollars topped. And also some EV stock and other, most of the stock actually down yesterday. Those small cap and international stock, except I think Beely was up. So stock future hopefully the intensive mixed trade Friday, which before the market opened it was mixed, followed by surge in January consumer spending data. Bond market steadily somewhat putting rebounding yields on pause. Oil and copper future dropped back from recent high. So we'll see how the market will react over the next few days and if there are catalysts to move the market back up. And although you may true that the yield curve went up, Fed Chairman Powell and Yellen have clearly said that the interest rate will not be raised at the moment. Repurchase of assets remains, and the economy still need government support on stimulus, which is the $1.9 trillion. You may argue that the index went very high, valuation of too high, but this is what I want to get into, just to get you not to in a panic mode, because whenever things happen, is all I don't know if really driven by the market or driven by the media, how they articulating and explain the things to you, right? So then you create all the small investors, which apparently some people don't worry, they still doing stock squeeze yesterday, versus people who are holding some more speculative stock or on the margins, right? So the way I look at it as an investor at the moment, reduce exposures is one way. Definitely shouldn't have margin because it's risky, and try not to short sell stock because that could be getting squeezed and getting yourself in trouble, and to look at some more fundamental stock. And also at the year, just to be clear, when I heard oftentimes I look at article, even myself, was people still believing Dow Jones Industrial Average with all the positive 7 factors from JP Morgan that explained in my previous video, it actually went up, went up higher. If not 40,000, maybe 36,000. S&P 500 will go by 7% or 12%. Well, so it varies, but it is going up, right, at the year outlook. Especially the other, not less a catalyst, but the reality is people believing the GDP is actually revised and will be, 4.5 to 6% range, right? You name it, and that's indicating U.S. economy is improving. Telling you the leisure and entertainment stock that were actually up last week, also an airline stock up, also telling you that consumers and investors believing that the market will be happening and will reopen, which should driving the reality check, if you will. We use that word. So it all depends how you interpret in that, right? So and I want to demonstrate to you that despite the fact that if you look at the overall the market since last year, I don't go by as far as March, okay? And pandemic, we all know that it will crash, and then with government stimulus, and then you push it up, and you will see the trend there. You can look back yourself. But I do want to point out the last 6 months because it's probably more representative and significance. And you really will have to realize and understanding that almost if you look at the timeline of this, it's almost every 3 months, there's always some sort of adjustment, right? because the market up so much, and you need some, some cool down. So it's kind of normal if you look at the other. For some people who also follow other fund managers, one of the guy was really old, but he was in the market for 20 years. He says some stuff more fair, in my opinion. He does holding some stock, and that will kind of have more transparency, tell you where they are at. So I'm not going to name you that one, so you can guess. But so then you can look at it, right, in September. When August time, August was the month rally. For those who probably can look at the chart, remember that August was really a bullish month on all the index, and this is Dow Jones Industrial Average. It was going up, and then in September, there was some bad news, and actually they didn't know what it is, and they just kept saying profit taking, and then there probably some other bad news coming on boarding to make the market drive down. And it is actually, I will show the Nasdaq graph a little bit later, but because their timeline a little bit off by a few days, but you really in the month, looking holistically on a month perspective, it was dropping, and it was dropping actually 15 days. Okay, so for those who don't remember what happened 6 months ago, please go back to your email note or wherever, just do some refresher, then you realize that, yeah, at that time, people were worried way too high already. At this point, it's way too high compared to March. But then it was slipping back, and then there were catalysts or some sort of good news or whatever. Then people started buying in, and you push it up. So you can see that it was a correction, and you go up. And I still remember in September, this was a panic. You just like this time, it was showing off. First day 7%, second day 3%, third day another 2.5% or so. You rebound back on fourth day a little bit, drop again on fifth day. People were worried about 6 or 7 day, little flat, rebound a little bit, then you drop again, and you have to hit until like around 10 trading day, 2 weeks. Then you really start to rebound back, and then you will recover, and then you actually recover in another 2 weeks or a month after, you recover to reaching another high. And then after that, look at what happened. The week, for those who still remember the dispute about the election and all this quick stuff, the week before election, Dow that week down 2,000 points. Well, for some odd reason at that time, people will have some faith and confidence about election, possibly. Well, people warn about what happened to with Trump may do something stupid. I shouldn't say that we're politically correct, but you know what I mean. So then things were, and also the election vote dispute. So the stock market was dropped, little 2000. And at that time, though, I know my friend wasn't as concerned as September slip, even though it was actually a more steeper slip than September drop. Okay, they were found really significant 2,000 points that week. And that week after, the good news came up with vaccine, and then all the way, it just flipped in the story again, which you call that vaccine is a catalyst. That's what we call good news. So you have a bad news driving down, you have a good news going up, and since then you way pick it up. Okay, and at that time, in this time, people was thinking so bad that there was a fund manager actually say the market was really bad. I'm gonna bet on the flip and think the market go for opposite direction. It ain't happen. You keep going up. And then I want to point it out again. Then in December, right? So you get a really good month. And then December is kind of top, like normal December, a little slower month. You drop again, right? So in this, you can see a drop. And then at year end, close the year, and you pick it up a little bit on the second week or third week of December. And then the last week of December, you slip again. Okay? So you can see, and then in after December, you pass in the month of January, right? I mean, you can see you've gone up and you slip. Well, actually, this is November. This is December here. But the pattern, you can see it. And then now you witching out January up. Then February, now we go down again. It's a correction, right? It's actually going down slowly, and you're up and slow. So now you go up again. So you can see that this is January. And sometimes I have that reading. This is the month of January. So now February, you see it go up. You just see the pattern, and then you're down, right? So the excuse for yield curve, right? But I do have to clearly say that, again, Powell and already clearly saying that no interest rate concern happen. Inflation is not a big deal. We may have go over 2% slightly, but wasn't as bad and as hot as you guys were thinking. Well, the asset repurchase will continue remains, right? So then it depends on how you interpret that, right? Yes, cost of capital will go up. Yes, that some money probably will move to the bond. Yes, that's sure. But moving that doesn't mean the whole market is done, right? I will tell you what will be more significant and outweighed and lifted all these is when, by the way, not stimulus, so there's still money going in, right? It should be positive. When they're really increasing of the corporate tax, the rich people money, which we think you should be legitimate on those because they made so much money, especially during pandemic, actually made them much more richer, right? And then also the potential of the transactional fees that could be imposed on the stock market because of the what happened to GameStop short squeeze, right? So those, to me, when that is imposed, that the market will have a much more significant impact. This is truly is market testing a low now and see if any support, right? And really because of that, people start to scare and sell everything up. So you can see everything small cap, international, pretty much everything is all going down. So, but we have had that happen before. And in fact, there were in January, I remember in February one day, it was suddenly 5% really quick and bounced back. So this is typically normal. And now I want to show you my view as well. Now that the timeline, again, is shift a little bit different days because at that time, there were time Dow Jones will Nasdaq was going up and Dow Jones didn't do anything. Then Dow Jones got caught up later and moved up better. And then Nasdaq started not doing anything. There were times Nasdaq was asleep, but Dow Jones actually still up because in a sense you are doing catch up. Because remember last year, Nasdaq have a 43% return roughly, while Dow only have about 7%, S&P 500 have about 14%. Well, what causing that? Because Nasdaq was going down much more serious and severe, and all these company that benefit from the pandemic is all high tech company, which is unfortunately fall into the Nasdaq index, right? So you have to try to dissect and analyze the market, look at what your portfolio and where you're at. Are you holding the stock that is safe and have vision and belief will go up? Because if you are holding a solid and good stock, market does have volatility, market does go down. While you make 25%, but now you scale back 5%, it should be okay, right? I mean, you're still making money. The market is still healthy. In fact, some sort of going down, well, correction, not a big correction, would be good. So look at this last, that was same thing. September was down, and I don't remember how many days, but again, just about 2 weeks, and then you're still pretty sluggish. You can see in the timeline here, October is right here. So September, you go down really serious, go back up, right? You see, go back up 2 points and slip down lower again. You rebound a little bit, it slip, right? So that point in September really slip to the bottom, and then you go back up in October. So it takes time to recover like that. So we will see if the market continue to be going down next couple of days. You may be rebound following week a little bit. You may drop a little bit more, and just trying to look at the support point, right? From a technical perspective, 50-day support, 25-day, you name it, and then in March, then that really the time to tell, if it is still going down or which a bottom to rebound, and then you will have actually going back, because you can see, all I'm trying to tell you is from the graph perspective, from what you don't have the long-term memory, you can see these behavior is not a new behavior. It happened before, okay? So the key thing is to observe and figure it out what you want to do and how you're going to do it, right? I mean, you can game. It's hard to game in the market, so you can sell up everything and say, I'm going to wait for this dip to be done and go back and buy, which is time in the market, which I don't have a problem with that. But that's just something, I want you to be note and cautious about. And again, so for the positive side, what are the catalysts? I want to run through it real quick. Johnson & Johnson, right? It's still pending to be approved. If it approved and you see the first case really got vaccinated by just one shot of the vaccine, then that's a good news, right? Second news is unemployment rate is actually lower this week, which the market somehow didn't really respond to that positive this time. So this could be next week. If we report another good number, then that's good. Third piece is Biden's administration still pushing very hard to work on the stimulations, right? So you will have that, maybe not 1.9 trillion, but there's some sort of money. Once it's executed, there's some extra money for spending. Consumer spending, they still retain, because people will worry about getting laid off or wherever, the future outlook. Not yet confidence to spend the money, so that will be, still potentially be spent. Housing market, they say, is still very hot, so that's just doing it as a, what they told me. So with all these information and news, it's just a question of how people look at these and whether the market will be still believing these are positive things to drive the market, not necessarily higher. So, and also another disclaimer, another potential you have to bear in mind is, well, while you're researching and trying to identify which low, maybe this is it. There will be a point. It is the highest. So that means even if we rebound, you won't hit any more record high, but that's where you stand. And if it is, then you're still good. The market's stabilizing, and you got to remember the market make up a different number of players: institutional investor, retail investors, there's short-term and long-term players, there's day trader, there are people buy options and put. All this will drive the market, and also international investors. So all this will actually create the dynamics of the market. So it's very hard to really pinpoint, but most people believe the profit taking is the answer of why market was down. So I hope today, if not, next week, look at it to see if this is going to have support and rebound. And if there's a support level, most cases is there will be something to driving high up again. And we will observe before you go down to that. But investor always have to be careful. Don't just look at this index should have some representation, but may not be reflecting your portfolio. So you need to look at what you have. And for Bitcoin, I don't want to say too much about it because you hear the story keep saying the future prospect, and at least Elon Musk, institutional investor, supporting the ARK fund managers show you that, well, they are buying Bitcoin, so they're trying to, if it slip, to support that market. But you need way more people to make this 50,000 sustainable or go higher. So something to think about, because in my view is, if you believe in Bitcoin, then you believe in the future. Then try not to be speculating and maybe buy in a hole. If you drop it to $10,000, you're gonna accept that risk and say, hey, maybe 2 years, 5 years from now, Bitcoin is more widely used, then my Bitcoin will go back up, right? I'm not even telling you what the number is, but I'm just telling you, everybody have a logic, have the understanding the tools, knowing the instruments, and you have to do a good decision, a wise decision for yourself. Hopefully everybody still benefit and profit from the market, and while they are really doing their job, their way, and find their way, they learn a lot in the investment that will actually help them out in the future, right? Especially for young people, they got another 50 years to go. Have a nice and wonderful day. Hope you have a good weekend.